Imagine this. You are careful with money. You pay your bills on time. You do not like debt. You do not like fuss. And when a letter arrives from the council, HMRC, your pension provider, or the tax office, you assume the figure must be right. But what if being careful is exactly what is costing you money? Because across the UK, many pensioners are not losing money through fraud, bad spending, or reckless decisions. They are losing it quietly through bills, tax codes, forms, and discounts that nobody has explained properly. And the worst part is this. In many cases, the money is not some special favor. It is not a loophole. It is not something you are begging for. It is money the rules may already say you are entitled to keep. But unless you ask for it, check it, or claim it, it can stay out of your pocket for months, years, or even forever. So today, we are doing something every pensioner should do at least once a year, a retirement bill audit. 5 areas to check before you pay another year without question. And stay until the end because the final step could save many older people from paying for help they could legally get for free. Before we continue, please take a moment to like this video and subscribe for more clear, practical updates for UK pensioners and families. It is completely free, and it helps us keep bringing you the stories that matter. Let's begin with the payment that can shock people the fastest: your pension withdrawal tax. Many people work for decades, build a pension pot, and then decide to take a lump sum. Maybe it is for home repairs, maybe it is to help a child or grandchild, maybe it is simply to enjoy retirement. Then the money arrives, and something feels wrong. A large chunk has disappeared in tax. The mistake many people make is assuming this must be correct. After all, it came through the pension provider. HMRC is involved. The system must know what it is doing. But often, the system is only guessing. When you take a flexible pension payment for the first time, your provider may not have the right tax code. So the payment can be taxed using an emergency tax code that can make a one-off withdrawal look like regular monthly income. Think about how damaging that can be. You take one larger payment, but the tax system may temporarily treat it as though you are going to receive that level of money again and again. That can mean too much tax is taken up front. Now, this does not mean everyone has been overtaxed, but it does mean every pensioner who has taken a flexible pension withdrawal should check. Do not just look at the net amount and move on. Ask, was this taxed using an emergency code? Was this a one-off payment? Did HMRC take more than my real yearly income suggests? If too much tax was taken, there are official reclaim routes. The exact form depends on whether you emptied the pot, took only part of it, or have other income. The important point is simple. Do not let an emergency calculation become your silent loss. The second area is savings interest. For years, many pensioners earned almost nothing on savings. Then interest rates rose, and suddenly ordinary savings accounts started producing noticeable interest again. That sounds like good news, but it also created confusion. Some people believe all savings interest is tax-free. Others believe all savings interest is taxed automatically. The truth is more complicated. There is a personal savings allowance. There is also a starting rate for savings, which can be very helpful for people with lower non-savings income. For some pensioners, especially those mainly living on the state pension, a meaningful amount of interest may be covered before tax is due. But here is where people get caught. HMRC may adjust a tax code based on estimated or previous interest. If your savings changed, your interest dropped, or your income is lower than assumed, you could be paying tax based on old information. That is why this is not just a savings issue. It is a tax code issue. Look at your tax code notice. Look for any line connected to untaxed interest or savings income, then compare it with what you actually earned. If HMRC is collecting tax on interest that falls within your allowances, ask them to check the figures. This matters because many pensioners are cautious savers. They do not gamble. They do not speculate. They keep money in the bank for safety. But safety should not mean paying tax you do not owe. The third area is council tax. This is one of the biggest household bills in retirement, and it is also one of the most misunderstood. There is not just one form of council tax help, there are several. First, there is council tax reduction, sometimes called council tax support. This is usually linked to income and circumstances, and each local council has its own rules. If you are on a low income, it is worth checking even if you have always assumed you would not qualify. Second, there is the single person discount. This one is simple but often missed. If you live alone, you may be entitled to 25% off your council tax bill. This is not about whether you are rich or poor. It is about how many adults count as living in the property. That means widows and widowers should check this immediately. Many people lose a partner, deal with grief, paperwork, funerals, banks, pensions, and family arrangements. Council tax is not the first thing on their mind, but if the household has changed, the bill may need to change too. Third, there are disregards and discounts linked to severe mental impairment, including situations involving dementia where the person meets the required conditions. This is incredibly important for families. A household dealing with dementia may be emotionally overwhelmed. The carer is thinking about medication, appointments, safety, and daily routines. Council tax paperwork may feel minor by comparison, but the discount can be significant. So here is the practical step. Contact your local council and ask 3 direct questions. Am I receiving every council tax discount I qualify for? Do I qualify for single-person discount? Do any disability, carer, or severe mental impairment rules apply to this household? Do not assume they will automatically tell you. Ask directly. The fourth area is attendance allowance. This is one of the most under-discussed forms of support for older people. Many pensioners hear the word allowance and immediately think that is not for me. Some think it is means-tested. It is not. Some think you must already have a carer. You do not. Some think it is only for people who are completely unable to look after themselves. That is not the right way to think about it. Attendance allowance is for people over state pension age who need help with personal care or supervision because of a physical or mental condition. That could involve washing, dressing, getting in and out of bed, staying safe at night, managing falls risk, or needing supervision because of confusion or memory problems. The key question is not, am I poor enough? The key question is, do I need help or supervision because of my health? This matters because many older people are proud. They struggle quietly. They adapt their home. They move slowly. They avoid the stairs. They stop going out. They say, I manage. But managing does not mean you are not entitled. And there is another important point. Attendance allowance can sometimes unlock or increase other support, so ignoring it can mean missing more than one source of help. The form can be long. It can feel uncomfortable because it asks you to describe bad days, not just good days, but that is exactly why many genuine claims fail. People understate the problem. They say, I can wash myself, when the truth is I can wash myself slowly with pain, with risk, and sometimes I need help. Those are very different answers. If this applies to you or to someone in your family, do not dismiss it because of pride. Check properly. The fifth area is paying for tax help you may not need to pay for. Every year, some pensioners pay hundreds of pounds for someone to handle a tax return or a tax problem that is actually quite simple. Now, let's be fair. If your affairs are complicated, if you own rental properties, have business income, overseas assets, complex investments, or estate issues, professional tax advice can be worth every penny. But many retirees have much simpler affairs. A state pension, a workplace pension, some bank interest, maybe a small investment account. For that, some people may be able to use HMRC tools themselves, or get help from specialist charities if they meet the criteria. The important question is not, have I always paid someone? The question is, do I still need to? Retirement changes your financial life. You may no longer need the same level of paid admin support you used in the past. So before paying another annual fee, ask what you are actually paying for. Is this advice? Is this complex planning? Or is it basic form filling? There is no shame in paying for peace of mind, but there is a problem with paying because nobody told you there may be free or cheaper help available. Now let's bring this together. The real issue here is not one bill. It is the retirement autopilot. A bill arrives, you pay it. A tax code changes, you accept it. A pension payment is taxed, you assume it is right. A council tax demand lands, you file it away. A health problem gets worse, you cope quietly. And year after year, money leaks away. Not because you were careless, because the system rewards people who know exactly what to ask for. So here is your simple action plan. This week, check 5 things. Check your most recent pension withdrawal and whether emergency tax was used. Check your tax code for savings interest estimates. Check your council tax bill for discounts or disregards. Check whether attendance allowance could apply to you or someone you care for. And check whether you are paying for financial admin that you could get help with for free or at lower cost. You do not need to fix everything in one day, but do not ignore it for another year. Because in retirement, saving money is not only about cutting back. Sometimes it is about claiming what the rules already allow. And remember this. A pensioner who has worked all their life should not have to become a tax expert, a benefits expert, and a council expert just to avoid overpaying. But until the system becomes easier, the safest thing you can do is question every major bill at least once. Not angrily, not suspiciously, just firmly. Ask, is this correct? Ask, is there a discount? Ask, am I entitled to a refund? Ask, has my situation changed? Ask, is there help I have never claimed? Those questions can be worth hundreds of pounds. In some cases, much more. And if you are watching this as the son, daughter, neighbor, or friend of an older person, send it to them, because many pensioners will not ask for help for themselves. But they may act if someone they trust says, let's just check. That one conversation could stop money leaving their account for no reason. If this video helped you, please like it, subscribe, and share it with one pensioner or family member who needs to hear it. Because the money you save may not come from earning more. It may come from finally stopping payments you never needed to make in the first place.